Ladies and gentlemen, I want to thank you all for being here. I want to thank people, all the attendees who have been here. I'm happy to say that in addition to the people who come live, we get hundreds and hundreds of views over the following couple of days that our webinars live on our website. And we've become kind of a go-to place for thought leadership as it relates to various issues across innovative banking and Fintech, and now obviously RegTech as well. And so welcome to the Future of Finance webinar series. My name is Phil Goldfeder. I am the CEO of the American Fintech Council. We are 125 members and growing strong, innovative, responsible Fintech companies who are trying to build the future of finance. We're excited today. You know, we oftentimes talk about consumer-facing products and products that are going to be offered to consumers. Today's conversation is a little bit differently. It's a little bit different in that we're going to be exploring kind of a bit on the back end, right? So how do you think about regulatory technology, which is, I think everybody on this call would argue, is just as important as a topic as Fintech is. And so we have a really, really amazing panel. I'm going to let each of them introduce themselves. Sonja, right? Ladies first. And I think that you're just the best. And so proud to say that. Tell us who you are, where you're from, what you do, and what makes you happy in the work that you're doing.
Oh, $1 million question. Thanks, Phil. Good to see everybody. Thanks for joining. I'm Sonja Theisen. I'm the CFO and head of risk at Emprise Bank. Emprise is a $2.5 billion financial institution headquartered in Wichita, Kansas. And we specialize in consumer, business, and embedded banking, which we'll be focusing on the embedded side today. So we are lucky enough to work with fintechs and companies and help them launch their financial services products. What makes me happiest about what I do would be all the amazing people like this crowd that I get to speak with on a daily basis and challenge ourselves to do cool new things. So great to be here.
I mean, after saying something like that, I'm going to go straight to Jonathan. We know that that was a lie going to Jonathan. Jonathan, tell us about you. Tell us about your company.
Yeah.
And what gets you excited to get up every day and do what you do.
Thank you, Phil. I'm Jonathan Awad. I'm the co-founder and CEO of Baselayer. Baselayer, we work with over 2,000 financial institutions. To date, 1,900 of them are banks. And we help them work with the small and medium-sized businesses all over America. So you think of it as KYB, business risk, business fraud. We ideally are trying to help them make better, faster, smarter decisions and on the good ones, and then try to get faster to a no. What makes me enjoy my job? I would say that I've just always really wanted to build a great team and a great culture and work with awesome customers in my own unique and eccentric way. And that's what we're doing with Baselayer. So I'm loving it.
Unique and eccentric. It's why you and I get along so well.
Yeah. Exactly.
Eli, we're going to kick it over to you.
Love it. Hey, everybody, I'm Eli. I'm one of the co-founders of Footprint. We think of ourselves as identity infrastructure for the internet. So we help companies onboard their users, securely store the information, and re-authenticate them as they sign back in. I think what excites me is and this is a very royal we, much smarter people than I over the last couple decades have made it very easy to move money on the internet. And we've seen companies like Stripe, their mission's been to increase the GDP of the internet. They've done an amazing job of it. Sadly, I think probably 3% of it's fraud. And normally that's really impacting people. Identity theft probably impacts $30 to $50 billion of loss for people a year. If we do our job well, that number should go down dramatically. And that's what gets us really excited every day here.
Amazing. Well, thank you. Thank you very much for being here today. Thank you for that. And with that, Jeff, last and most certainly not least, I've known, I think, of all of you, I've known Jeff the longest. I've had the privilege of working alongside him at a previous role at a bank. And so, Jeff, you're in the consulting advisory services today. I mean, same for you. Sort of, what are you doing now? How do you think about it? Kind of what makes you happy about it?
Yeah, well, first of all, thank you for having me. Very much looking forward to the conversation. I'm the founder of JV Squared Consulting. We're a compliance consulting practice. We support fintechs and community banks in the sponsor banking space. I have roughly 20 years of experience within compliance with a heavy mix of traditional global banking, working at companies like Citi, Barclays, Lloyds, And most recently, over the past 7 or 8 years or so, I've been working within the fintech space, working at companies such as Cross River, where you and I have met, other BaaS middleware companies. I served in several senior compliance leadership roles. I managed end-to-end compliance programs, served as head of compliance, BSA officer, have a ton of experience within the sponsor banking space. What gets me excited is helping earlier stage fintechs or smaller community banks that are just entering the space, in kind of explaining, explaining what they don't know, right? What they don't know in the space. Understanding the regulatory requirements, the obligations, what will get them from, earlier stage to live and then ongoing from an oversight standpoint. So that kind of keeps me going from a day-to-day.
So I'm lucky enough, I get to interact with each of you on a daily basis. You're all sort of very engaged in the work that we're doing here at the American FinTech Council. And so we're going to jump right into it. And I think just to sort of level set, we're going to start very broad, and then we'll start to narrow down as we go on. And because we're based in DC and I happen to be in DC today, I think we have to start with kind of the regulatory environment, what it was 6 months ago and what it is today. And we're going to talk again. We're not going to talk politics, but I guess the question is, you can't turn on the TV without seeing sort of constant changes. I think it was a 48-hour period where we saw 3 different directors of the CFPB are named. Obviously, OCC is similar. Unclear sort of what the long-term, Travis Hill was appointed as acting chairman of the FDIC, but there's been rumors now that maybe a different chairman is going to get nominated. Let me ask you this. How have you guys viewed it specifically as it relates to regulatory technology? I ask this, and I'm excited because we obviously have fintech companies, consultants. Sonja, you're from a bank, right? And so you all have different viewpoints. How do you think about the regulatory environment? How do you look at sort of the shifts? And how does that impact your day-to-day in terms of the way you think about not just what your company is going to do today, but maybe how you shift? And I say this maybe coming back to you, Jonathan Neely, afterwards, like, how do you think about your future maybe a little bit differently, given maybe more opportunities or not? So Sonja, I'm going to start with you on this because I think from a traditional bank perspective, where do you fall on that?
Yeah, my team and I talk about this a lot, and the straight answer is we're doing today what we did yesterday, and we're the month before and the month before, because we're trying to do the right things. And I think any time that you drastically change what you're doing because of an administration or leadership change, you're going to get whiplash real fast. So we want to continue to do the right things in a safe and sound way for our partners and for our bank, and we're going to continue to do that. Obviously, our popcorn is out as all of these changes are going on, just like anyone else. And if true rule changes come in, we will react to that, and we're trying to stay in front of everything as much as we possibly can.
Excellent. Jeff, I'll say the same question to you. You're advising a number of banks, you're advising a number of fintech companies. I'm sure, right? They see the updates from AFC, they want to understand how that's going to impact them, right? And so what do you tell them?
Yeah, so nothing changes, right? Every 4 years, this question comes up from administration to administration. Oh, are these requirements going to go away, or is it going to become more strict? Maybe it's going to become stricter, but that doesn't necessarily mean anything's going to go away, right? KYC is here to stay. AML requirements, controls, it's here to stay. If anything, it's actually going to get more strict, right? As we see with all these enforcement actions, the consent orders, all the oversight requirements are going to become more and more strict. So I don't see this as changing at all. If anything, I think we need to just stay the course. What I advise is just, engage with your bank partners, let the bank partners engage with the regulators and understand exactly what is necessary, and just keep doing what you're doing, and everything should be fine.
So I'm gonna go to Jonathan first. Eli, I'm coming right back to you, but I want to ask you the same question, but also in terms of you're building a company, right? So you inherently have to think about that a bit differently in terms of how do you position? What's the old adage, right? You don't have to go where the ball is. You have to go where the ball is going to be. Hockey, right? You have to be where the puck is going to be. How do you think about that as an entrepreneur starting a company and already sort of proving success, but the shifts have an impact on you, I'm sure.
For sure. How we think about it at Baselayer from building products is we have the jobs to be done, the pain points, the problems that are top of mind. We look at the regulatory outlines, the rules, the CDD final rules, and then we think about and talk to customers. For the most part, we're focused on the problems that are the ones that are top of mind for customers, but we're still building for the rules. A really easy example is CDD, the final rule, number 4, is you have to have an ongoing risk monitoring program of some sort for your clients. And so we very much, in the beginning, we had a compound complex product suite that included ongoing portfolio monitoring and risk monitoring. And yet, I mean, we've worked with over 2,000 financial institutions. We've talked to hundreds and hundreds of them. If you really ask, hey, do you have an ongoing risk monitoring solution? No. Do you do ongoing risk monitoring manually? No. But it's one of the rules. And so, yeah, it's a little bit of this awkward conversation where it's like, we built it because someone needs to have it. You have to do it. You're not doing it. You seem okay with not doing it. Okay. And so a lot of this is from our perspective. We mainly focus on business data, non-PII data. We like this. This is good. This is great because we built all of it anyway. But customers and financial institutions and our partners, they kind of just do the things that people like. It's like last in type of things, right? The last thing they get yelled at is the thing they focus on the most. And that's maybe not as professional as that could be, but it's the truth. And so that's really where, if all of this regulatory scrutiny, nothing's changed. The rules have been around. It's just almost being more enforced now. And so people are being a little bit more cautious and a little bit more focused on it now. But actually not, as Jeff said earlier, the big topic comes up every so often, but actually doesn't drastically change. People just don't do that much as they should have, because if they don't get yelled at, they don't do anything about it. So that's our stance from a product perspective, actually the same, completely the same.
Amazing. And we're going to dig into that a bit. Eli, again, same question, just in terms of like, how do you think about, where footprint is going to be in 6 months as you continue your trajectory?
Yeah, this is going to be a long webinar for me if I have to keep following Jonathan. He puts things a bit more eloquently than But I think Jonathan said it really well. Pretty much our product doesn't change, but the amount that our customers will want to explicitly be using tools may change. And that's why, footprints from day one begun, I believe there's I think Baselayer very much too, that you should be building in compliance that it doesn't require a PhD to use these products. It's not that people don't want to be compliant. They just don't want friction to be compliant. So if you build a tool that's doing this naturally, people are going to do it. I do think that that's what an age with lesser regulation is. It's where people are going to go out of their way less to do things that they should be doing. So if we embed that naturally in the tools, they'll still be covered. People aren't nefarious. They just want to prioritize differently. So let's just make it so that it doesn't really matter how they prioritize.
All right, we're going to come back to you. Yeah, we're going to come back to you first next. But Sonja, is he right? I mean, you're coming from the bank perspective, right? Like, and I'll ask you actually to fact check both of them, right? We're in the world of fact checking, right? Is Jonathan right? Do you continually, how do you think about sort of the challenges you face from a compliance regulatory? Do you always think about it in a holistic way? Or unfortunately, right, it's like whack-a-mole, right? Like, what is the last problem that I got to solve for, and how do I look at it?
Well, I think my answer has to be, it depends. First, I love the last in, first out example as a core accountant, but
yeah, you got it. Yeah.
Yep, I got it. It depends, unfortunately. It depends how big the last in issue was, and it depends what else is on your priority list and what you're strategizing with. So it requires constant refocus, constant collaboration with not just ourselves, but with our partners also. It's what's most important to them, not just what's most important to us. We obviously have to keep a safe and sound environment, but it's not whoever is yelling the loudest, but it is whatever is the bigger and most pervasive issue at the time. And that might be the last one, or it might be the one before that. It really does just depend.
Jeff, again, the same question. Yeah, I think, how do you think about it in terms of, like I said, you're looking at it from both perspectives, right? Jeff, you have insight into sort of Fintech way they're thinking, and obviously the community banking, the bank way as well.
Yeah, I think largely it's a game of whack-a-mole, right? In a lot of ways. There's a lack of standards, right? And I think that this is it's a common theme. I know that there's a ton of conversation around standardizing the requirements. What is the minimum, the MVP of sponsor banking or compliance in general? I know that there's a lot of information out there.
Base layer and footprint, by the way, that's the answer.
Yeah, exactly, right. But the fact that there's a very little amount of standards kind of leads the banks in general to kind of just implement their own risk-based approach and have a best guess solution, right? Each bank will have their own individual approach to things, right? And depending on where the fintech program wants to go, they may be told something very different from institution one to institution two. So I see this as a problem. I think that, shifting priorities, playing whack-a-mole, is a big problem, right? We see within the regulatory environment, there's regulation by enforcement, right? And that's kind of where the priorities get shifted. And it's a problem. And I'm hoping that the conversation here is going to lead to maybe possibly some solutions. But from my perspective, it's just the priorities are shifted wherever the regulators are smacking the biggest fine.
Yeah, and again, I think that's exactly right. I mean, we often talk about the American Fintech Council as a standards-based organization, right? The idea of trying to build out some of the standards to make it easier for our membership, but that requires buy-in, obviously, from the regulators, from policymakers, and from the larger ecosystem. Eli, I want to talk about footprint specifically for a minute. We're going to start to dig in a bit in terms of there's not a morning where I wake up and I don't look at my inbox and I'm being told that all my compliance problems could be solved if I just click on this link, right? And that's not just the sort of the spam, not the spam, but like sort of the nefarious folks, right? Like every single day, we'll talk about AI later, but like AI is driving my inbox mad because somebody wants to solve my compliance problems. And sometimes it's specific and sometimes it's very broad. How do you think about kind of the work specifically that Footprint does, but more importantly, how do you distinguish yourself as sort of as a company, not just in your advertising and your claims, but more importantly in terms of the product that you deliver?
Yeah. Footprint is a very opinionated tool, and we're also a very transparent tool.
I like that. I like it already.
We see a lot of tools in the market that give you a sandbox for you to create a bunch of workflows. And then they'll be transparent about the workflows you've created. And on the other side, we see people who it's very much a black box. To us, we don't like either option. We want to be opinionated because there are so many, each application we think should be viewed dynamically. If we think that you have stolen somebody's identity, we think it's a waste of your time and money to ping a DMV to see if they issued that license. Because guess what? They did. They just didn't issue it to you. Conversely, if we think that you have a manipulated identity, we think it's synthetic. Well, if that's the case, we should ping a DMV because it will be in a bureau, but not a DMV. Those are very granular decisions, application by application, that wouldn't really make sense from the design. But at the same time, if we're offering that off the shelf to fintech, their banking partner needs to know that the sources that we're using to make those decisions, and we have nothing to hide. We're really happy to be working with companies like LexisNexis for KYC and Experian, with Baselayer, with Centrelink. We want to make sure that's prominently displayed. So that's how we really think about it, which is that we are a very opinionated tool because we think in the world of fraud, we can let you design a workflow, but we don't view our job as making you feel like you did your job by setup. We want you to feel like you did your job by results. And that's really how we're thinking about it.
And how do you, again, I guess the next logical question is how do you scale that, right? Like, because every customer, every partner is going to be a bit nuanced, right? So how do you manage that as you continue to grow?
It's a great question. We started to see this dichotomy of people want to, mix and match sources. But at the end of the day, you're up against this force, which is the biggest companies have their own data. So nobody has an API where, a really big banking core can plug in their data, or a prediction marketplace can plug in their chain referral fraud. Only they have that. So Footprint's somewhat unique in that if you are just using the Footprint data, we're really opinionated. And we think that scales really well because that's an SDK that we keep updating. So Footprint launches, we do software updates. If we think there's a better way to integrate our tooling, We do that and we update that to our customers. Then on the other side, we make it, our newest decision engine lets you bring your data to it. And that is meant to be a scalable way for that function of it.
Jonathan, I mean, Eli gave me like a softball, right? Like, if he's the opinionated one, like, what do you dare call yourself?
I like opinionated a lot. I've been raving about Footprint for a long time. Anyone who'll listen, I think that team's a bunch of geniuses. I think one of the best parts about Baselayer is we spend a lot of time with our customers, and we'll go and get lunch with them and just spend like, hey, walk us through your risk policy, and just like walk us through your day. Let's watch you through your day, and let's actually try to just help you enjoy your day a little bit better, but without any type of credit or fraud losses kind of getting in the mix by going too fast and doing things automated that maybe shouldn't be automated. So if they're opinionated, and I think they are opinionated, I think they make amazing things. I think for us, it's a lot of just distribution focused product building. And the distribution really just means we sit and spend a lot of time with customers, not to bring Jeff Bezos randomly into this conversation, but I always really liked everything he ever said about nothing matters but the people you're serving. Nothing else matters. Their day, their satisfaction, their jobs, their outcomes. That's all that matters. And so we would probably just call it more, partner obsessed, focused, customer obsessed, financial institutions obsessed. We're just more obsessed there because these are the experts and we're serving them. There's a lot of parts of their job that are just awful. No one wants to search up Secretary of State data across every single 50 Secretary of State website. Who would want to do that? We should be able to get all of that data from the government itself, put it together in a very easy to use API that Footprint and their team of geniuses can integrate really well, and then let it be effortless for the financial institutions. That's where we're spending all of our time, making all of the, I like to call it like the amygdala, lower level thinking work automated. And so we're very much just customer obsessed, financial institutions obsessed. And we start there, and then we allow brilliant teams, financial institution teams, Footprint teams to be opinionated and to do things with this base layer foundation of data that we've brought for them.
I'll try. Look, let me just say, and I think you nailed it. You're kind of merging, right? Sort of the traditional way of building those relationships, truly understanding what the nature of the problem is, then obviously using sort of what Baselayer does and finding the right tech to actually solve that problem in an innovative way. I mean, I think you're really kind of bridging that divide. And so kudos to you and the work that you're doing. Similar to what we did before, like Sonja, I'm going to start with you, and Jeff, I'm coming right back to you on the fact check in terms of the way you think about it from, right, advisory from a bank perspective in terms of how you think about automation in the compliance space. Oop, you're on mute, Sonja. Someone had to be the first.
Thank you. Happy to be the first. So I like all of the words everyone is using. Customer obsessed. From my perspective, and how we think about our space is, I want you to be customer obsessed. I want you to be thinking about the bank. And I also want you to be really opinionated, but I want you to do it in a safe and sound way. And I want to understand where our information is coming from and where information is going. And I just want transparency from a banking perspective. And you said something before, Eli, it sounds like you guys are very transparent with where all of your information is coming from. And that is incredibly important to us, especially as we have those regulatory conversations. And we found that that's not always the case. So that's a real selling point for a financial institution right now.
Amazing. Thank you. Jeff?
Yeah, I think putting on both hats, right? Consulting hat, and then also obviously as a banking compliance individual. Transparency is super important, right? I know Jonathan, Eli, both of you just mentioned that, heavy data rich, transparent processes and workflows are super important. When assessing and evaluating any new third-party vendor, compliance solution, software provider, it's so important to understand where the data is coming from, what the workflow looks like, how do things go from input to output, and what happens in between, what are the, exceptions and escalation points within that flow. As a compliance officer, it's really important to understand that, because if we don't understand that, then how could we optimize, right? How could we build out processes and execute against those processes and build out teams to be able to manage alerts and whatever exception reporting if we don't understand it, right? And then similarly from the banking side, it's really important to understand the entire workflow, like I just mentioned, because ultimately the regulators and the examiners are going to come in and say, show me, right? How do you know? Where did these alerts come from? Where are they going? What is your fine tuning? Did you optimize above the line, below the line? Is this the right approach? So I think that's all super important when assessing any new vendor. There's so many different factors to take into consideration. This is just one of them, right? Obviously, there's third-party risk and a whole bunch of different things that you can consider, but just looking at the data alone, it's so important to understand everything that goes in and comes out of that solution.
Okay, Sonja, I'm coming back to you. Again, we're talking about innovation. We're talking about RegTech. Excited that Footprint and Baselayer are here. Emprise Bank is sort of a leader, I would say, in the innovative banking space. I've gotten to know your leadership team and continuously impressed with, again, their level of engagement, their level of thought leadership in terms of the best way to move forward. But there's been an evolution in banking, right? And I think once upon a time, and I remember this from my time at a bank, right? Once upon a time, sort of regulators and people were impressed by the size of your team in legal and compliance. I mean, I remember hearing this all the time. 25% of our bank employees are in legal and compliance. And that was somehow impressive, like that was going to actually solve a problem. And Eli, and Jonathan, get ready, because you know where the question is coming to you guys. But like, Sonja, do you still think about it even a little bit that way? How do you think about it, and how has that evolved?
So I do not think of it that way at all. However, the unfortunate reality is that the regulators still do in many cases. So it's a competing priority, and my priority is very different from theirs. We are absolutely technology first and then staffing as necessary. And that is not the expectation. The first thing they do is pull out an org chart and ask the numbers question. So it is a fine balance every single time to ensure that they understand the technology first journey and understand how we're doing it in a very safe and sound manner. And so it's education constantly on that side.
And what would you tell someone maybe who's not quite where Emprise is, right? What would you tell someone who's trying to figure out what the pathway forward is? How do they start to adjust?
You need to write everything down and show that you can't just talk about it. You have to prove it with how you are operating, your findings, your exceptions, all of the documentation behind that, I think, is the most important thing. You can't just make a change. You have to show them you're ready for a change.
All right, Eli, you get to go first again. I mean, this is it, right? Like, this is sort of like, this is your softball of the day. You're not getting another one. I mean, how do you convince somebody like Sonja? Now, again, I think Emprise has evolved. I think all of AFC member banks have sort of started that evolution or fully into that evolution. How do you make that sell, not just in terms of what, sort of you think of the regulatory approach, but how do you sort of take someone who's just not comfortable with this space and make them comfortable? And then more importantly, how are you making their processes more efficient so they don't need more humans?
Yeah, I think we think a lot about, we're trying to not build pageantry. We're trying to give banks tools to make it really easy to, but as we spoke about earlier, Jonathan and I were speaking about building compliance into a product. Footprint, we think a lot about like tenant-child relationships. I don't love the name, but it's kind of like the industry name. And we want to give our partners like Emprise the ability to design one-click SIP integrations that are approved. Oftentimes, fintechs will want to apply to work with a bank, and they'll say, this is our onboarding flow, can you approve it? And then this is where you start to have larger teams. But the banks know their risk profile. They know what onboarding statistics work. I love fintechs. We have many fintech customers that they're oftentimes alive, but a lot of times you'll see a brand new fintech and they raise some money and they're like, we're going to reinvent the wheel. Uh, I'm not opposed to innovation. We like innovation, but I think that you're not really going to reinvent the wheel of what do you need to do if there's not an exact address match? You probably need to collect a driver's license. So for us, it's designing these pre-integrated SIPs. And then, as I said earlier, Footprint's kind of weird in that we're an infrastructure tool. We're a security and authentication tool that happens to do KYC and KYB. It's how I jokingly, lovingly refer to us. That means that we're a secure file storage company, and we make it really easy for banks to be able to request information back from fintechs, and we call it compliance automation. We truly want to automate that onboarding process of a fintech and make it really easy to go back and forth to collect new information.
Jonathan, increase efficiency, decrease latency. These are things that we hear all the time. I mean, again, how do you sell it to a bank in terms of what you guys are actually able to save them? To save, obviously you're partnering with a number, and so I think you speak with a significant amount of authority in terms of people have already come to trust you.
Yeah, I think it's the good thing about us is that we get to be this base layer foundation of data and work with a bunch of partners like a Footprint, like a core provider, things like that. And so we start with the basics. We can help you automate a very simple review of a business that you do want to work with. And for whatever reason, the data source that's already plugged in to your software, your system of record, whatever you're kind of using, your LOS, your core, your onboarding decision engine, your something like a Footprint. If the data that is plugged in is somehow not finding this business, but they are a good business and you mainly reviewed it and you found it, but it just took you an extra half hour, call it hundreds of times. It's only used hundreds of customers. A half hour, hundreds of times is really bad, and it's really slow. And first off, the team doing that work doesn't enjoy doing that work. And then the business that applied, call it to a local community bank, a credit union, etc. We work with, I think, over 1,000 now community banks. They're just waiting on a response, and they then have to go to a different community bank or a different bank, and like, oh, but what am I missing here? And so just being able to find, on average, against some of the other competitors that we work with, I always find that to be funny. It doesn't feel like hand-to-hand combat or anything, but sometimes it is. We'll find 40 to 50% just more good matches that instead of Caitlin or Ian looking up and Googling for this and checking all the secretaries of state, we'll just find it for you right away, and you get to make the decision in a few seconds. Just starting there, the very simple things actually just such a big impact, and it's a very kind of simple conversation. It's a simple way to test it. It's really just saying, hey, pick 100 random of your clients, your prospects, etc. And we do a confusion matrix exercise. 20, 25 of them were easy and improved right away. Maybe 50 of them were manually reviewed, and then you found them. And then 25 you declined. And don't tell us which ones were which, and we'll let you know. And that's like a pretty easy way to just get into the door with someone and earn trust with them and goodwill with them, and then bring just so many other pieces and sources of data to them. And we really try to just focus where they already are. We don't try to force them to work with us directly. They can use, as I mentioned, in a core and an LOS and an LMS, and someone like a Footprint. Or Footprint's doing so many more things. It could be your whole experience, your whole application could be different. Very much this multimodal approach. And so we like to work just, well in the same. Eli mentioned it, like play nice in the sandbox, so to speak, with everyone else you're already working with. So that's been our approach so far.
I'm sorry, I don't play favorites, although I already told Sonja she's my favorite. Yeah. I love what you just said, mostly because when we started off this webinar, we talked about like, oh, we're going to explore the back end, right, in the operational. But what you just did was actually connect it to end user, right? Because that's really what we're all here for, right? We're trying to provide a consumer service in a manner in which the consumer is demanding it today, right? Consumers want to access, want quick decisioning, want access to capital. Unfortunately, as you all know, right, that traditional institutions and mechanisms are no longer serving a vast sort of segment of the population. And what you just said is, while you're solving for a bank's problem, inevitably you're really solving a consumer's problem all the way on the end, and you're making that access so much better. And so I love what you just said. You know, we're going to stay on the on sort of the KYC, KYB, right? Jeff, you did, I think, KYC at Citi, if I recall. Obviously, you sort of you broadened out. You were at Cross River. You were doing a more of a general compliance. Does what you're hearing, does this ring true in terms of the automation? Obviously, when you were focused on that issue, it was long before all this innovation existed. So how have you changed in terms of the way you thought about your work then and the way you think about it today?
Yeah, believe it or not, when I was at Citi, one of the major problems that they were facing, and this is not unique to Citi. Citi happens to be a behemoth, but this rings true to the smallest community bank out there as well. False positives, right? The number of hours, and I think, Jonathan, you mentioned, 30 minutes times hundreds of accounts is a lot of time and a lot of man hours and a lot of money lost, right? So the problem that Citi was facing is, when you have millions of customers and 10x that in terms of the number of alerts that they have to review manually, that results in a lot of money lost, right?
Yeah.
You have to throw a ton of people at it because the technology wasn't there. And I know that this was, 10 years ago, they were trying to solve for that, right? How could they implement a compliance process that would reduce the false positives, reduce the cost that is necessary, and ultimately make it faster, right? Because that's the end game is get it onboarded faster, get these transactions through the door, get these accounts onboarded, and so that they were trying to tackle it then. We're now 10 years later, right? And so we've come a long way. What I'm finding is, specifically, Phil, for you, right? AFC member companies are very fintech friendly, right? Very technology forward, right? So what we're finding is all these fintechs, all these community banks that serve this industry, they pride themselves on building amazing UIs, great user experiences, and they're very data rich, right? So why are you going to be building out these amazing user flows and experiences and having all that data, but then throwing a ton of people at manual processes? It doesn't jive, right? So there's an ability right now, especially with the technology available, footprint, and obviously all of the systems available. We can build better reporting. We can utilize technology to automate these manual processes, minimize the false positives. You just have to identify the flow, right? It's really important to, before you throw people at it, really learn what the process is. Then you could build around it. That's sort of what I advise companies. That's what I like to implement. We did that at Cross River, right? Most of the fintech banks that you serve, right, or that you support do the same thing, right? They're very technology forward, and it's a mistake, I think, to just throw people at it. I know the legacy thinking from the regulators is, show me their resumes and how many are ACAM certified. I'm like, it doesn't mean anything, right? It doesn't really mean anything. It just checks a box. So, that's my soapbox. I tend to try to find efficiencies, find the scalable, sustainable solutions. And if it means implementing technology and so be it, right? You don't need 1 million people if you could do it with a fraction of that.
So Sonja, similar, right? Like, Emprise is, and how long have you been at Emprise? I didn't even ask you that. How long have you been at Emprise now?
10 months.
10 months. And, my guess is sort of you have a variety of experience prior to getting to Emprise.
Yeah.
But obviously, Emprise, you took this job knowing what Emprise was, right? Knowing what Matt and the leadership team were trying to accomplish at Emprise. Was that exciting for you, right? Or was that scary for you? How did you think about that? And again, were folks like Baselayer and Footprint, did that kind of like reassure you that the right tools exist? I just have to figure out how to sort of bridge that divide. And I think bridging the divide is a big topic here at AFC all the time. How do you bridge that divide? So tell me about how you thought about that.
Yeah, no, it was super exciting for me coming into a data-driven, AI-friendly organization, especially a bank. That isn't nearly as common, so it was fantastic. And I really, really resonate with what Jeff said around you need to understand your process first before you put the technology in place, because then it makes those regulatory conversations so much easier. And what I would say about Emprise when I started, and part of those conversations was we're still early on in our embedded journey. So we were still solidifying those processes as we're making technology choices. So I was able to be on the front end of that. And because we were doing it that way was one of the reasons that I felt comfortable enough to join. So it was very exciting.
Amazing. Thank you for that. Sort of again, digging a bit deeper in. I know, Jonathan, I mean, you've really established yourself sort of on the KYB side. I mean, you talked in your example earlier, you talked specifically about small businesses who are waiting for decisioning. How do you think about sort of small business versus consumer? Does the work change? Do the workflows change? Is the technology different? Do you see yourself sort of shifting and evolving as time goes on?
Certainly. The good thing about most of the problems that are being faced, fraud is a sharing problem. If there was some, an all-knowing, all-aware, omnipresent being that could just know for sure this person is not actually that person that they're applying for with this IP signature and this device and this attempt for this application, well, then fraud wouldn't occur. And the hardest part about consumer fraud is that you're somewhat guessing until you've been burned. And then hopefully there's some sort of a consortium that has been created for you that gets the right type of sign off to share the data, because most of it is PII and protected data. So that's not the case in business, right? There are very many detail points that are not PII and not protected data and can be very easily shareable. And so most of the data to adjudicate is not PII. Most of the data to prevent fraud is not PII. But then there's the similar challenges of, well, most of the data on credit and underwriting is still locked up in somebody's bank account. So there's similar challenges in that sense in the underwriting world, right? You need to see all the transactions. Are you actually paying back your loans on time? Are you credit stacking? Is this your only bank account? Do you have 6 other bank accounts, or you're moving money around and you're not paying back one of the lenders from this bank account, but you've got 5 more, and one of the other ones you are paying back a lender from that account. And so there's a mix of, it's very different. And I would say in the fraud and identity world, it's super different. We've been able to put together a really large consortium on fraud and reported fraud very quickly. There's a bank director article on it 2 weeks ago, because we don't collect PII. And so people have been able to just give us, hey, this name of business, this address of business, this EIN committed fraud against us 3 weeks ago, 6 months ago, 12 months ago. You stole this product for this amount of money. Actually, none of that is PII. So that's very interesting and useful, and we can go really fast that way. But as we go along, we want to start to build creditworthiness scores, probability of default scores, things like that. And then you're still stuck in the same exact consumer issues where most of the most useful information, of course, is locked up in someone's bank account, someone's accounting data, someone's tax file somewhere, stored on some document in some folder. So a lot of great aspects to the business world, and we think about it very differently that way, and very much out the box consortium, out the box network, out the box events-based architecture, because you can. And there's no laws at all, really. It's been very underdeveloped from the government and the regulators, how they really feel about business data and the protections there. But also similar problems being faced on the underwriting side.
Sort of building off of that, Eli, just to, sort of in the theme of how much could be done under one roof, right? I oftentimes talk about core competency, right? Like, let everybody do what you do well, and that's what you should be selling, what you do well. How you build that out, again, every company looks at it a bit differently. obviously what sort of to what Jonathan just said, and that like there's inherently different challenges as you try to face different issues on the business side, on the consumer side, but like probably a million other sort of differentiators. How do you think about that in terms of what Footprint tries to solve?
Yeah, I think the toughest thing to learn as a business is to say no. It's something we talk about all the time, whether it's customers we want to take on, whether it's product lines we want to build. It's something weirdly that maybe we can all take inspiration from venture capitalists, and that's kind of their job to say no a lot of times every week. And it's tricky. I get it. A company comes to you and they want to work with you, and they're like, we'd love if you had this product too. To me, the hallmark of a company is one that's focused and one that's ruthlessly prioritized. I think one of the benefits of the last several years of fintech has been that a lot of our team members come from companies like Stripe and Robinhood, which were amazing companies, but they also went through times where they had to they could focus on so much, and as a result, nothing as exemplary as the initial products got built. So I just gave a philosophical answer. What does that actually look like? For a while, we hadn't built a product, something like transaction monitoring is a very real example, because we didn't really see an angle for us to build that in a uniquely better way while we were still trying to build such a good onboarding tool. Now that we're older and that we have more space, it's something that we're going to think about in a different way later this year. But we were very happy to lose deals historically over things that weren't going to support. And that if somebody wanted something that was all in one and we weren't that bundle, we weren't going to be the right fit for them. You can bundle companies in a lot of different ways. And for us, it's our job, we think, to really classify what we think we're building and not the other way around.
I think it's very, very well said. Okay, we only have about 2 hours left. And so, no, I'm kidding, folks. I'm kidding. We have a few minutes left, but there was an old, sort of, if you want to get attention today, you could say either crypto or AI, right? And when you're in Washington, you're sort of in these spaces, in the fintech spaces, those two words will capture people's attention. We're going to jump into AI. We're not going to jump into crypto today, but we're going to jump into AI. And God, you need an entire hour just for that. You probably need many, many more. Sonja, I'm going to start with you. I'm sure everybody is offering it in some way, shape, or form. I'm sure you guys, your email box in the morning is probably 10 times as full as mine, given, number one, the emails are probably being generated via AI, and they're offering you some AI solution. Again, I think Jonathan, Eli, you guys are going to have very interesting perspectives on this, so I'm coming to you. But Sonja, number one, does it scare you? Obviously, we don't have the clarity. I mean, you don't have the regulatory clarity or that you need, right? And so how do you think about it? How do you implement it? How do you look at companies that are implementing it? And how do you think that will hopefully evolve?
So it excites me more than it scares me. But I mean, as the head of risk, I always have to approach AI in a very rational manner. Our company is using AI and making great strides with it. And as the CFO side, I mean, I see the efficiency and what we're doing there, and it excites the heck out of me. Then my risk side counters me a little bit on the day-to-day. What scares me a little bit about it is just what you said. There is a lack of regulation, but it's not so much that. I think I'm more fearful of when the regulation comes, it's going to be all over the place or something that is almost impossible to follow and might negate some of the benefits that we're feeling from AI. So that the what's to come maybe scares me a little bit more than where we are right now in our journey. And then what we look for or how we vet use cases, I think was your other question, or how we look at it from a partnership perspective, is it's always understanding, again, what we're using, what controls are around it, where the data is coming from, whether it's external, whether it's internal. We've been fortunate to build a lot of our own internal AI tools, so it's a little bit safer use cases, if you will. But there has to be complete and utter awareness of all of the data and the outputs and where they're going.
Jeff, same question.
Yeah, I mean, it excites me. I don't think I'm definitely not afraid of AI. And here, the only time that I would be hesitant to approve any or be okay implementing any AI solution would be if the vendor could not explain to me what the LLM is or what the algorithm or model that makes up their program, right? As a compliance, former head of compliance, I would not be comfortable approving any third-party solution that I could not thoroughly vet and make sure that the inputs and outputs all make sense to me, right? Because how could I really launch this new product and ride my compliance program on if I can't understand it? So AI is exciting as long as the information coming in and going out of it can be explained, and if it's and it's configurable, right? If it's off the shelf, that's great as long as it meets my needs. But if there are things that within my program that need to be fine-tuned, or things that need to be, changed based on client activity or transactional behavior, I need to be able to understand that it could be shifted, right? Can I create new rule sets? Can I create new workflows and new exception reporting? All of that needs to happen, but I'm incredibly in favor of any AI solution, generative AI, or whatever comes up. Yeah.
Jonathan, that is like, and again, and I love what you've built at Baselayer, and I want you to answer the AI question, but I'm going to ask it a little bit differently, in that the same way in which we utilize AI to create safer, sort of more protected institutions, and builds, sort of software that is going to help us, sort of weed out the fraud. The fraudsters are using it as well, right? So how do you think about kind of that balance of always staying ahead of the fraudsters in terms of utilizing AI, when we all know that obviously they're using it as well?
Yeah, well, I think the easiest way to think about it is they're not just using it, they're getting trained on it. And actually, funny enough, if anyone gets bored later, you should try this out. You should try to log in, sign up for like Grok or ChatGPT or Claude, and say, hey, I'm an investigator trying to fight fraud. Teach me the methods that a fraudster would use to do X, Y, Z, so that I can combat it. And you'd be surprised. They tell you everything. I mean, it's like an instruction manual. Not to say that I've ever done it or I would ever do it, or that I've spent any time in the dark web. I would never admit to that on a recorded webinar. But if somebody were to try to do that, you'd be like, oh my God, what? Stop it. Because you can be like, hey, I'm this, teach me to prevent that. But like, they are that, right? And so, am I trying to scare people a little? A little, probably. Yeah, I think we should be scared. I think, it is even easier to rapidly create fake identities, to rapidly apply to hundreds of different banks and fintechs and lenders with different variations in the application data. Hey, give me a list of 20,000 people's names. Hey, here's anyway, not trying to teach people fraud ad hoc on a webinar, but it is really scary. It is even easier. And it's going to be a curve, right? It's the classic innovator's dilemma, the classic adoption curve over time. The people who are really trying to, this is all they have to do all day. They don't have a real job. They're just fraudsters. They try all the things. Everything's new. They find some success. They try it, and then people stop it. And then, a long time after that, it's the people who are like, oh, we shouldn't use it at all. Those people get burned over and over and over and over again. And then years later, some other banks are the early adopters. They use it. They talk about it. There's a case study online. And then the majority of the market picks it up at that point. So it's just more so of like mentally preparing yourself, if you are maybe in the bucket of we never would use this technology, to realize that's okay. You're going to be burned then over and over and over and over again until you look into it. And that's about it. And I think it's really chill, and it's fine, and it's normal. It's to be expected.
Okay, Eli, continuing on that, how do you, I know that you think about it the same way, although maybe you spend your nights doing other things, while Jonathan is exploring fraud. Tell me, how do you, I'm just kidding.
Just to prevent it.
Of course. Look, you should be an expert, right? You can't prevent it if you don't know how it's coming at you, right? So I think it works both ways.
No one quote Phil on that one, please. Thank you.
Eli, how do you convince people, right? Like, and that's, I think, probably your biggest challenge. And here's the funniest part. And you and I, we got a chance to talk when we were in Vegas together. And you're saying, like, sometimes this, sort of talking to fintech companies is just as challenging as talking to banks, right? Like, how do you go about trying to convince people that these are problems that they need to solve for before, again, is sort of catastrophic?
Yeah, I mean, we like to say fraudsters, they have no red tape and no bureaucracy. They'll be the first people to adopt any tool. And then, yeah, like Jonathan said, I'm not trying to scare you. It's not difficult to look at examples. I think the best way to communicate where AI is kind of good for fraud is admitting vulnerabilities in our own product. We have solutions, but I think that if you're going to come out and say our doc scan's 100% perfect, it's not true. Nobody's going to believe it, and it doesn't actually start a conversation about how fraudsters have gotten good at imposing a face onto their own liveness. Conversely, if you say really good fraudsters can defeat our doc scan and they can defeat your doc scan, so I'm not trying to tell you my doc scan is better than your doc scan, I'm telling you the other things we do to defeat this, then you'll start a real conversation. And I think that's, you can't really match like Gen AI fraud tool with Gen AI fraud defense tool. You're normally matching Gen AI fraud tool with triage of tools that are doing other things. It's also why we've believed from day one at Footprint that the goal isn't to catch every fraudster, because that's an impossible goal that we'll never do. Our goal is to label 300 million people in America, and there shouldn't be more than that. So fraudsters can use whatever tools they want, but it won't matter.
Nice.
I love it. I think that I love the way in which you describe sort of, it's not just about my tools better than their tool, right? It's thinking about kind of what is the next level of thought process in terms of stopping out the fraud. Again, just very quickly, 30 seconds from each of you, if you can, to close us out in terms of like, so what is the next, I would say 3 to 5 years, but that's a joke, right? Like it's almost like the question should be like, what's the next 3 to 5 months hold? Obviously you all come to this with a bit of a different perspective. And so Sonja, what does the rest of 2025 hold? And then maybe a peek into the future.
Gosh, it holds for us. We're scaling our embedded program, and it's a really exciting time to be at Emprise. And we're going to continue to use and develop and master AI and data, and just be that example for a community bank.
Thank you, Jonathan.
Next 3 to 5 years holds, I think, probably the fastest part of the slope of adoption. I think you're just so inundated with people talking about it at dinner, at work, on random webinars, and news, Elon Musk doing weird, crazy things, and also running a $30 billion AI company himself, that it's a matter of, there's never going to be more people talking about this than ever before, and more people giving it a shot than ever before, and new companies starting than ever before. So that's really exciting, and just watching people try new things and, let the best products win.
Eli, how do you think about it? Next year, next 2 years, next 5 years?
Our goal is to continue to build products that will leave the internet better than we started it. That's always our mission. I think, as weird as it sounds, it's really easy to get caught up in how do we make sure we're complying with regulation. Like that's clearly what we should be doing on a day-to-day. The end goal of this, though, should not be creating something that becomes so obscure for our own users that they're not actually leaving it better. So that will always be our North Star.
And Jeff, look, you're the one who's advising the banks. You're advising. I mean, you're helping the Elis and the Jonathans of the world and companies like that sort of figure out what the right moves are in terms of developing the right product. And obviously, you're serving community bankers like Sonja, modern community bankers like Sonja, I should say. How do you think about it, and what do you think is the future holds?
Yeah, I can't speak for the next 3 to 5 years. I can speak for the, possibly the next 6 to 12 months, right? What I'm seeing is it's probably going to be a heck of a lot harder for programs to get banked without really strong compliance processes, right? And what that means is no longer is it going to be okay for a fintech to just say, oh, I have the bare minimum, right? Here's what I have in place. Here's my manual process. I'm doing whatever it is. it's going to be really, really important for programs to evidence a really strong compliant program, utilizing technology or not, but having multiple processes to ensure that they, combat fraud, combat any illicit activity. And so people like Sonja could assess these programs and say, you know what, I can trust you with the keys to my, my system. So that's what I'm seeing. That's what I advise companies, just like, don't do the bare minimum.
Thank you. Thank you, Jeff, JV Squared, Footprint, Jonathan, Baselayer, Emprise Bank. You guys are awesome. You're awesome on the webinar, but you're awesome every day that I get to deal with you and work with you and collaborate with you and build the future of finance, which is exactly what we're all about. So thank you all for joining AFC's webinar. We look forward to seeing you next time. Talk soon.